Good morning and welcome to the Killik & Co podcast for Friday the 24th of April. I'm Patrick Gordon standing in for Michael Pate. This week was a relatively quiet week on the economic data front, certainly compared to last week. But it has been a very busy week for corporate earnings, with about a quarter of the constituents of the S&P 500 reporting earnings this week. Greece remains very much in focus for the markets. So far, there's little sign of contagion, but there is a meeting of the Eurogroup that's taking place today. We're not expecting any major breakthrough on that meeting, but we'll come and look at some of the indicators relating to Greece in a little while. This week also saw the release of the minutes of the last Bank of England meeting, the MPC meeting. Revealed that there was no change in the voting pattern, with policy remaining unchanged, which was what was expected. But they did have some interesting things to say about inflation, and we'll come on to speak about that in a little while. Overall, macroeconomic data this week has been slightly biased towards the downside potentially, although the data as a whole was mixed. We had PMI data from China, the US, and the Eurozone, which were all slightly disappointing. In terms of earnings results, as we said, Q1 results season is in full swing. Generally, the market reaction to these results has been quite positive, although a lot of the multinational companies are mentioning, this is US multinationals, are mentioning the strength of the dollar having some impact on their earnings. Just turning to Greece, we have seen Greek yields come down slightly this week on some positive comment coming out of various people involved in the discussions about the Greek funding. However, there's a Eurogroup meeting today, and we're not expecting any major breakthrough. As you can see, the yields do remain elevated, despite having come down slightly this last week. If you look at the yield curve, the stress is still very much at the short end, which is reflecting fears over a potential default in Greece. Looking at Greece compared to some of the other peripheral countries, you can see there has been a slight disconnect and not a lot of contagion so far. We did see the yields rise slightly in the likes of Italy, Portugal, and Spain, but not nearly to the extent that we've seen in Greece. As you can see, this gap has widened quite considerably. Certainly the ECB QE program, which is taking place at the moment, and also some strengthening in the Eurozone economy, which has been benefiting from the lower oil price, and also some of the euro weakness has been benefiting some of the exporters. That's providing some support to the other peripheral bond markets. If you look at the stock markets, the equity markets, you can also see the disconnect between Greece and some of the other peripheral countries. This is clearly the correlation has broken down quite clearly there. Turning to the UK, as I mentioned, we did have minutes out of the Bank of England MPC this last week. No change in the voting pattern. But what was quite interesting is that they did seem to suggest that there could be a rise in inflationary pressures over the medium term. The relative strength of sterling seems to have come through into the CPI inflation indicator sooner than had been anticipated, so would have less of a disinflationary effect further down the line. And also, as the lower oil price comparator starts to drop out of the annual comparison, will also potentially could mean that you could see a tick up in inflation later on. And with wage growth as well, if we do start to see wages rise, particularly with no improvement in productivity, then you could see inflationary pressures start to increase in the UK. In terms of macroeconomic data in the UK, we had retail sales out this last week. Disappointing really, largely due to lower the petrol price, lower sales in the petrol price. Political uncertainty may have some impact in the near term on sentiment, but overall, we expect to see that a rise in real incomes should be quite supportive for consumer spending. Turning to China, I mentioned that the PMI data were quite disappointing. Chinese PMI at 49.2, that's in contractionary activity area. And this is just the latest in quite a recent spate of disappointing economic news out of China recently. Policymakers have responded. We have seen a cut in the reserve requirement ratio by 100 basis points, and this is to stimulate lending. And if we see further weakness in the Chinese macro picture, then we could see further stimulus coming through. In terms of the US markets, as I mentioned, reporting season is in full swing and generally has been quite well received. We're up at near record levels in the S&P 500 at the moment. A lot of the companies have mentioned dollar as a potential, as a headwind and having an impact on earnings. But going into these results, a lot of earnings expectations had been downgraded. So it is already reflected in the reports that we're seeing coming out. Looking next week to the economic data, we've got US PMI, services PMI. Perhaps the key focus is going to be on the UK GDP and the US GDP. UK GDP expected to see 2.6% year on year. Probably in focus, mainly because with the upcoming election, that's going to receive quite a lot of attention. And in the US, the figure is expected to come in at 1%, which would be a significantly lower figure than the Q4 figure of the Q4 figure of 2.2%. That's quarter on quarter annualized. Sorry, just before moving on, the other key thing is the FOMC rate decision. We're not expecting any change at this meeting by the Fed on interest rates. Turning to the week ahead in terms of corporate news, the big one probably Apple on Monday for us. We've got other ones, Killik & Co. covered stocks, BP, Merck & Co. Cummins. And then we kick off some of the banks, UK banks reporting. We've got Barclays on Wednesday. Thursday, Royal Dutch Shell, Smith & Nephew, and Visa is another Killik & Co. covered stock, which is reporting next week as well. And then on Friday, we've got Lloyd's banking group continuing the banking reporting season. Just looking at some of these in detail, we've got Apple, as I've mentioned, on Monday. Our analysts are expecting a strong set of results from Apple. The focus is going to be really on the iPhone sales. As you can see from this chart, the introduction of the iPhone 6 did sort of reverse the trend or reinvigorate the trend growth in iPhone sales. We're looking to see if the continuation of that trend. Also the watch, looking at pre-orders for the watch and any currency impacts which are impacting on Apple's results. And then just to end, Visa results this week. Mobile payments are set to take off, especially on the low value, high frequency transactions. And we think that Visa is very well placed, very well positioned to benefit from that. And the other aspect as well is China ending Union Pay monopoly in June, potentially opening up a large part of the global market for Visa on that. And Visa earns about 8 cents on each transaction, so it's potentially a big beneficiary of the moves in this space. That's all from me this week. Thanks very much. Have a good weekend.